Welcome to Explain the Charts, where we dissect the market news and the chart data to give you the whole picture. Today, September 18th, 2024, we're focused on the USDCAD pair. The US dollar has been struggling against the Canadian dollar recently, with the pair currently trading near the 1.3600 level. This weakness can be attributed to several factors, including the anticipation of a potential interest rate cut by the Federal Reserve. Traders are looking to the Fed's decision on rates for clues about the future direction of the US dollar. Meanwhile, the Canadian dollar has been receiving some support from the recent release of the Canadian CPI data. The data showed that inflation is slowing in line with the Bank of Canada's forecasts. This has led to speculation that the BC may continue to ease monetary policy in the coming months, further supporting the Canadian dollar. Now, let's take a look at the charts to see how these events are playing out in the market. If we look at the daily chart, we can see that USDCAD has been trending upwards since the beginning of September. The pair has broken through previous resistance levels, indicating that the bullish momentum is strong. However, the recent price action suggests that the pair may be due for a pullback. We can see that USDCAD is currently trading near the 200-day moving average, which could act as a key support level. If the pair falls below this level, it could signal a bearish reversal and a potential move lower. The Relative Strength Index, RSI, is currently sitting above the 70 level, indicating that the pair is overbought. This also suggests that a pullback could be on the horizon. It's important to note that the daily chart provides us with a long-term perspective on the USDCAD pair. To get a better understanding of the current market sentiment, we need to look at shorter-term charts. Let's switch to the 1-hour chart and see what insights we can gather. Switching to the 1-hour chart, we can see that the USDCAD pair has been consolidating in a tight range over the past few days. This consolidation could be a sign of indecision in the market, with traders waiting for more clarity on the Fed's interest rate decision. We can see that the pair is currently trading above the 50-period moving average, which could act as a support level. However, if the pair falls below this level, it could suggest that the bullish momentum is waning and that a move lower may be in the cards. The RSI is currently hovering around the 50 level, indicating that the pair is neither overbought nor oversold. This suggests that the market is fairly balanced at the moment. The 1-hour chart gives us a more granular view of the market action compared to the daily chart. To get a real sense of the short-term price dynamics, let's zoom in on the 15-minute chart. Now, let's take a look at the 15-minute chart. Here, we can see that USDCAD has been moving in a sideways pattern for the past several hours. This is further evidence that the market is indecisive. The pair is currently testing the 20-period moving average, which could act as a support level. If the pair falls below this level, it could signal a bearish breakout and a potential move lower. The RSI is currently around the 40 level, indicating that the pair is slightly oversold. This suggests that the pair could bounce back from the current levels. However, it's important to remember that the 15-minute chart is the most volatile time frame. So, any price movements here should be treated with caution. Now, let's summarize some of the key price levels and trends we've identified. The daily chart shows an upward trend in USDCAD since the beginning of September. The 200-day moving average acts as a key support level for the pair. The 1-hour chart shows a consolidation pattern, with the 50-period moving average acting as a support level. The 15-minute chart shows a sideways pattern, with the 20-period moving average acting as a support level. If the pair falls below any of these support levels, it could signal a bearish reversal and a move lower. However, the RSI on the daily chart is currently above the 70 level, suggesting that a pullback may be due. This pullback could be temporary, and the pair could resume its upward trend after a brief correction. The market is currently waiting for more clarity on the Fed's interest rate decision. If the Fed cuts rates as expected, it could weaken the US dollar and push USDCAD higher. However, if the Fed holds rates steady, it could strengthen the US dollar and lead to a move lower in USDCAD. The upcoming release of Canadian CPI data could also provide some insight into the future direction of the Canadian dollar. If the data shows that inflation is accelerating, it could strengthen the Canadian dollar and lead to a move lower in USDCAD. However, if the data shows that inflation is slowing, it could weaken the Canadian dollar and lead to a move higher in USDCAD. Ultimately, the direction of USDCAD will depend on the interplay of these economic factors and the market's reaction to them. Keep an eye on these key price levels, support and resistance, and upcoming economic data releases. This information can help you make informed trading decisions and maximize your potential profits.